Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and, yes, sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. On this episode, we are speaking with my very good friend, Brian Bodell, the CEO of Movemint, about his embedded solution that's helping credit unions grow their membership and increase the performance of their bottom line. So if you're ready, let's suit up and get out on the field. Brian, welcome to the show. I'm very happy to have you. Why don't you start off by telling our viewers a little bit about yourself and about your company, Movemint?
Great. Kris, great to see you as always. I've enjoyed working with you for many years throughout the industry and obviously on the Venture Tech panel, which is a blast. So quick background, I've been in FinTech for about 25 years, been through a fair amount of M&A, all in the software realm, primarily focused on serving credit unions. Most recently, so I'm currently CEO of Movemint, which really before was originally QNexus, which TrueStage had invested in and then acquired in 2020, and then as a team, and then became TrueStage Digital Storefront. And then we spun out of TrueStage in October of last year. So the company has been rebranded as Movemint. And so our focus really is just driving growth and ROI for credit unions. We work with about 100 credit unions at this point, and we're all about embedding personalized offers for loans, deposits, and let's say insurance in all their internal channels, such as digital banking, contact center, branch, and then external, email, SMS, RCS, in-app, social, etc. So the whole concept behind it is, credit unions know their members so well. They have data on their members. How do they build wonderful experiences and personalized offers based on their particular needs to drive, growth for the credit union? So it's all about how do you get, higher products per member because that, translates into loyalty, let alone the balance sheet benefit, but also go after non-members and deliver the appropriate offers to them. So bottom line, been in the industry a bit, focused on Movemint, came out of TrueStage, a wonderful company that really cares deeply about, this industry, and just have a great team focused on, helping our clients grow and compete in this hyper competitive market with the SoFis and the Chimes and everyone.
Do your clients typically go live with a particular set of channels, or do they kind of go all out across all of those channels that you mentioned? Is there an ideal way to start using Movemint to help them grow their credit union?
It's a real insightful question. In general, a lot of people, and somewhat this surprised me a little bit when we look at the data. So I always was thinking it's all about digital. So they all typically dive in, and it's, the Movemint platform is connected to digital banking. So as a member, you log into digital banking, you go into an offers section, you can see both invitations to apply, pre-approved loan offers, as well as deposit offers and insurance offers. But really, the contact center and branch have had tremendous results for clients. So again, thinking that the data was going to show that, digital is so dominant, we have, many clients getting 50% of their, redemptions and their revenue coming in through, the contact center of the branch. So what they do is they train and incent their staff. And so for us, it's really about how do you enable the credit union to truly, show their members and that they know them, and to, incent their staff and have their staff help, because their staff is just phenomenal at this. So for me, that was a little bit of a surprise. We had one client, again, a bit of an anomaly because they're large and very sophisticated, but, they probably, did about 40 million in loans.
Wow.
In a 60-day campaign just in their contact center branch. So it's really all about how do you turn your channels, which sometimes in the past have been looked at as a cost center, digital banking contact center and branch, and
Yeah.
maybe turn them into a revenue center. But beyond that, it's, back to the, some of the people we've known in the past, like, Butch
Mm-hmm.
Leonardson is like, we've got the best products. Credit unions have wonderful products with wonderful rates. How do you make sure, you help your members get
Mm-hmm.
those rates and those wonderful products? But credit unions have to do things like use their data, personalize, market, sell, in order to be, relevant and drive. Second part of the question is on the outbound channels. You see print, you see email, but we're not seeing as much. It's starting to pick up more on like the SMS, the in-app, and
Mm-hmm.
the through partners like Pulsate as an example,
Right.
or social. So we see more kind of email and print on the outbound channels.
Is the higher use of the contact center and the branch indicative of the demographics for that credit union and kind of the usage of their members, or did it ignite something new in their behavior?
Yeah, that's a great question. I don't know the exact answer. I mean, I think
Right.
there is, there is variability by credit union based on their membership and who may be more likely to be going into a branch
Right.
or contacting the contact center. So 100%, I think that's there. I just don't necessarily have the data to,
Okay.
map the member profile versus the utilization of branch and contact center. What I will say, it's clear to me, and it's wonderful that the credit unions have just realized that, hey, you have these, wonderful staff members that really know and care about their members, that have great skills. Why not leverage it? So they're able to, we'll have like a widget in Episys as an example. So if, I'm in the contact center, I'm a branch, I'm speaking with a member, I answer, as a staff member, I answer the member's question or give them the
Mm-hmm.
information they need. But then I can redeem an offer on their behalf and just say, hey, by the way, you have a great, auto loan offer. You've got a great credit card, or here's a home improvement loan. And if they've been pre-approved, they don't even really need to apply. It's really, that's the whole thing, is like, who likes to apply for a loan?
Right.
Or go through the process to open up a new share certificate or a CD or money market. They can do it on their behalf. And the whole concept is just make this as simple for the member, but also for the credit union staff. Because if it's a loan offer, we pop right into the LOS via real-time API. If it's a deposit offer, we go right into the core. If it's an insurance offer, like, we'll pop into the TrueStage systems, as an example. So it's a good question.
It does. Do those integrations take? How long does it take for a credit union, once they sign the deal with you, to be able to start recognizing and using the solution? I mean, sometimes in the past, integrations, which has been your bread and butter for a long time, right? But in the
I'm a
in the
plumber.
past, those integrations took some time, right? Until
Yeah.
solutions like what you brought made it easier to do. Today, as we stand today, how long does it take for a credit union to be able to start using Movement inside any of those channels?
Yeah, you obviously know the right questions to ask, having been in the industry, and where financial institutions struggle through implementation. So our implementations right now, especially, so one thing, TrueStage did a real nice job of investing in the cloud platform. So the original QNexus platform was on premise, and as you know, on premise is no fun. I feel for the credit
Yeah.
unions where they have to stand up servers, secure and monitor those servers, spend the staff time on that, update the software. It's no fun. So implementations back then were much more challenging. With the cloud platform, we really set everything up for them. So it's a 4 to 6 week process. I would probably lean more towards 6 weeks. Now there's variability here, as you might expect, because in any integrated ecosystem, we're trying to do as much of the work for the credit union. The credit union drives obviously the strategy. We use their underwriting rules. They're leveraging data from their core and their bureau in terms of any lending offers. So and they have to do the end-to-end testing. So if assuming the digital banking provider is cooperative with the credit union, the LOS and the core and the bureau files come back in appropriate format. So in general, we say 6 weeks, which is much better, because of the cloud, and we can do much more on their behalf. And we're also moving to leveraging, kind of where I equate some of this is kind of a managed service where we can
Mhm.
actually set up and even run their first campaign or two or ongoing basis, for, some professional services to make their life easier. I do look at this a little bit, from a movement perspective, the kind of progression where, right now, most of the clients are really driving the campaigns themselves. So I kind of
Mhm.
refer to those credit unions that went to driver's ed, took the test, practiced driving. They're good. Like, we know how to market, we know our data. So they're the ones driving themselves. We have
Okay.
other clients that may want more of a Lyft or an Uber experience. And like, this is
Right.
our strategy, and we want you to set up and kind of run this. And where I see kind of the vision going is leveraging more of the Waymo approach,
Mhm.
where we're able to leverage more AI to set up those campaigns and have human in the loop review what they set up, and then some AI review,
Right.
analysis, optimization. So I look at a progression of both the platform and the technology that's being utilized, but also really the right service level for the financial institution, because
Mm.
those that know how to drive, like
Yeah.
cars, right? Like,
Yeah.
um, they're like, hey, I love this, manual car that I can
Yeah.
drive at high speed, and I'm going to keep driving. But we have other people who be like, hey, Uber's great, Lyft's great.
Right. 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 Is there a so it sounds to me like there's you guys, because you're integrated to so many systems, right? That as long as a credit union has any of these potential integration endpoints, you guys could be a solution for that. Is that fair?
No, exactly, and that's the way
Okay.
we really focus, our efforts is on those, and we are continually adding more integrations. If we don't have an integration, yes, systems integration takes time.
Yeah.
Got to go through the process, and it's less of a technical issue, as it's really more of a
Right.
kind of a business access to the test environments, and working with the various vendors on the back end.
But it's not a standalone solution.
Correct. Yeah,
Okay.
we can do. I'll should tell you like two areas where it's. I mean, it can be standalone, but then there's
Okay.
some manual on the back end. So we
Okay.
don't need to be digital banking. Like I said, we had a client that
Right.
launched without digital banking. So they're just contact center and branch. And if we have, let's say, indirect member campaigns, so,
Hmm.
the holy grail for credit unions of how do you
Should
turn
be.
indirect members into direct members? That's one of our use cases. We don't need digital banking there because a lot of the indirect members don't have they don't even know, they may not even know the credit union, let alone have creds for
Right.
the digital banking. So,
They'll take their
you
payment
know,
to the dealership.
that exactly,
Yeah.
it's a perfect example.
Yeah.
And so in that case, all they really need to do is market to their indirect list, and they can put in, let's say, their promo code LS4 or something, come to a landing
Okay.
page, and then from that landing page, we go to the LOS or core.
Okay.
If we are completely, and the same thing applies for non-member campaign. So the credit union can launch go after non-members, and those non-members would come back to this landing page. And to be completely standalone, then we could have a manual feed going back to core LOS. But in general, we're trying to maximize that integration just so it's more of a hands-off thing for them, meaning the credit unions.
Talk to me a little bit about how your solution actually makes those or identifies those offers. Are you guys reviewing the profiles of the members or the potential members and coming up and saying, we think these are ideal products potentially for them, or vice versa? Instead, are you taking that analysis being performed by somebody else and being the final mile for it to be delivered?
Also, a very insightful question. Right now, our platform is primarily a bit of an orchestration layer.
Okay.
The segmentation of the core file, the determination of the products, the prices, and what offers should be going to which segments or people, let alone the underwriting guidelines. That's really all driven by the credit union. What we are doing, we have two partners that we're in the process of integrating with that do kind of the next best product thing that we've
Mm-hmm.
talked about for a long time. So it'll be something that for those credit unions that do want some assistance with understanding what the potential next best product for a segment or members may be, they can leverage those. So we're integrating to those. We also have a lot of data and a lot of best practices over the years. So we've got our client success team has a Claude project,
Mm-hmm.
as you might imagine, with all these best practices. So our implementation client success teams will work with clients and say, hey, these are our recommendations. But ultimately, the credit union is driving, the data and the underwriting and, which products they want to offer. We're just trying to provide more tools and partners to help them get there.
Are credit unions making, so this is obviously, growth is such an important concept for credit unions, right? I mean, there's a lot of folks who are aiming solutions at solving that problem for credit unions. Is it growth in and of itself representing future potential income that helps drive the sale? Or is it something around more immediate income needs that are driving those sales? Like, what do you think, just as you look at the conversations you're having with credit unions, what's driving that purchasing decision?
That's a great question. I think it varies, as you may imagine, but in general, I think it's a little bit more about, the more immediate needs. And the way we look at, the Movemint platform is, it is truly built to be this platform that the credit union can utilize to execute on their strategy at any point in time. So at some point, they may have a low loan to share ratio, so they want to drive loans. In other points, they may have a higher loan to share ratio and they want to drive deposit offers. So if you look at it as really a platform and let them manage their balance sheet based on their strategy they have at the time, the state of their balance sheet, and then even the competitive situation. So for us, it is a little bit more, hey, what's our strategy over the next 6 months is what, we're seeing, or 12 months based on, their competitive environment. Our biggest push is, again, as you know, we've both been working with credit unions for so long. It's, they're friends and family, like literally our friends. And the level of competition out there that, has been in the SoFi and Chimes and the Chase and the BofAs. But now you've got, Nubank coming in, Revolut coming in with like crazy ass, trained models on their transaction data. And members are no longer giving credit unions a free pass, in my view. I feel that in the past, members have been a little bit more forgiving, saying, hey, credit union's not Netflix, it's not Google, it's not Amazon.
It's my
because they're a financial institution. It's my credit union, so they're not going to be as personalized or smooth in the experience. But now they're seeing that these other financial institutions can deliver these wonderful personalized, omni-channel, I hate the word, but omni-channel, experience. The members aren't given a free pass anymore, and they are handing products off to, any of these providers, whether it's, Cash App or Venmo on the payment side, or Apple Pay and some of these other components, let alone the neobanks like SoFi and Chime. So to me, members' expectations are way high and their patience with credit unions is lower, and credit unions need to get out there, use their data, use their, wonderful staff to drive these experiences, because they know their communities, they know their members better, but they're unfortunately often too slow and too risk adverse. They have these planning cycles and these budgeting cycles that are like, we're going to do all this on an annual basis. Here's our 5-year plan. We're going to do this by 2030. And especially in this age with AI, things are moving so quickly. Credit unions need to become a lot more adept and a lot more aggressive at using their data to personalize those offers, to get those great products in the hands of the member, and make sure so those members aren't going out there, because a lot of those competitors I reference have much worse rates and much worse products. It's not good for the member. So if members just talk about, if credit unions just, they're like, it's all about member service, not about sales and marketing. We're not doing sales marketing. It's all about member service. Well, okay, fine. Classify it as you will. It's member service to make sure that your members and non-members are coming in and getting the right products that are better for them, as opposed to from the competitors. So that's what disconnects for me, is our friends don't move as quickly, aggressively, or not as agile as I would like them to be, because we want them to be here. We want them to serve, the communities, because they're so valuable.
Do you think the AI opportunity, we'll call it, right? Do you think the AI opportunity is making that gap wider
Yes.
between credit union. Okay, so you and can credit unions are they too far behind to adopt AI as a means of catching up?
Um, you're good at this. So yeah, I guess where's my take on this? And look, we're generalizing here. The credit union, movement or industry is quite large and quite diverse in terms of different capabilities and everything along those lines, as you know better than anyone.
And Jeff Price always said, when you've seen one credit union, you've seen one credit union. Right?
Yeah, exactly. Such a brilliant quote. I love it. Yeah, I mean, so to me, I don't, do I think credit unions are behind in general, certainly relative to some of these neobanks and some of these D2C fintechs that are, coming into space? Yes. But is it too late? No, it's never too late. You never give up. And so to me, it really comes down to, and it's not about AI per se. To me, I'm always, as you know, and we've had these discussions in, kind of the venture tech deliberations too, it's strategy first. What is the credit union strategy? Who are they trying to serve? Whether it's a member, meaning a consumer, or a member that's a business owner or commercial, like whatever their market is. So focus on the strategy and then leverage the technology and tooling to support that strategy. Mm-hmm. I think where, first and foremost is regulated entities. And I think the NCUA has always done this very well in having those dialogues at GAC. So, Kyle and Sarah always, hosted those sessions. I think it's really important is, hey, regulation, governance, privacy, security, all those components. So credit unions need to have that, the proper InfoSec privacy regulatory governance in place with whatever they do with their data, whether it's AI or not AI. So strategy first, the regulatory and InfoSec guidelines, must be. But to me, where credit unions have an advantage is, again, their staff knows their members and they have all this data on their members. The problem is the data, and this is an age-old problem, and companies like, Architecture and others are out there really trying to solve that, is, all the disparate data sets. So for me, if what I think is important, and to avoid the AI sprawl that's going on, is that credit unions have those policies and the tooling in place and get the training and education for their members to use these things. Because if credit unions, and there's also obviously AI being embedded in so many different platforms out there, but so forget the front layer and the AI tooling on the front end, don't forget it, but those are going to continue to evolve at kind of a rapid pace. But what the credit union, in my view, needs to focus on now is their data and their data architecture and the access controls associated with it. So if the credit unions can, and also leverage the human skills. I mean, so much of this really comes down to your staff that knows what they're doing. They know the products their members need. They know what they're doing. Their staff collaborates. Don't go, in a, hole and basically as a credit union staff member and just do stuff using AI. Work with your teammates. So like leverage the human capabilities and then leverage the tooling. But if you have the data and infrastructure and integration capabilities underneath and all the regulatory and InfoSec and the governance, components around it, that unique data set becomes the moat. And so to me, it's all about getting the AI tooling that the credit union has to continually build context so the AI tooling that the credit union has gets better and smarter. Because that's the thing that everyone's talking about, or, that I'm reading about and, hearing about, is really just those organizations that leverage their people, leverage their data and the architecture, and leverage the AI tooling. That AI tooling is and the people are getting so much faster and so much smarter so quickly that's, it used to be like, hey, yeah, a few people have, I've got 4 data scientists at my credit union. I'm able to do all that stuff. But that was kind of a slower advancement, like getting ahead. Now with this tooling, the credit unions that are leveraging it are going, and these neobanks are going at much faster pace. So credit unions are behind, in my view, in general, but they can catch up by using their data properly and getting the right architecture in place. But so, just an opinion.
No, I think that's fantastic, and frankly, I think it's spot on. Right? I mean, it's it is a weird place out there right now. It is a very, very weird place. Some people are doing
Essentially.
amazing things, right? And others are not even, they're asleep at the wheel, right? Is what
Yeah.
it comes down to. Um, to highlight the kind of impact this can have, you and I have been in this industry together for more than 20 years, right? We've known each
Yeah.
other. You're multiple time founder, multiple time exiter. How is the software industry different today because of AI than what you saw even 10 years ago?
Oh, wow. Even a year ago.
A year ago. Yeah.
Yeah, no, truly. No, it's a great point. I think what's a very exciting aspect to this time is the fact that it's really putting more control in the hands of the business users and improving communication in a lot of ways. And I'll tell you what I mean by that. So if I'm a product manager at a software company that really tries to live with clients or lives with the market, really understands what the needs are, they've got deep domain expertise, whatever they do, like they're coming right out of, financial solution data, they're coming right out of, personalization models, whatever that expertise is, it allows the product manager to say, hey, I would like to build this, or like to have our team review and potentially build this. And rather than having that conversation, that whiteboard section, the full like product development lifecycle, software development lifecycle, it's like, here's a product manager handing off to like a business analyst, to then the architect reviews, the dev teams review, they plan their sprint, they go through QA. Everything is now collapsed. And because that product manager, that business owner that can deeply know the need or the problem or the solution they're trying to provide, it's a lot easier for them to hand off and like, hey, here's my prototype. And so then the architect, dev, designers, BAs, everybody get, and again, some of those hats can be worn, people can wear multiple hats in this case. They're like, oh, okay, I get it. Rather than having like all these meetings and all these whiteboard sessions. So it's really enabling the business to show what they're thinking and allowing the technical teams to get this, built. And then on the technical team side, I mean, getting to like 100% test coverage is like a beautiful thing, right? Basically just trying to hit your entire code base to make sure, you're eliminating bugs or InfoSec related issues. That's super cool. So we're just seeing the amount of, the ability for business to drive more and making it easier for the dev teams to leverage the tooling, converting legacy code to more modern code, documenting code, which has always been a challenge, has become a lot easier. That being said, it still requires a different way of thinking, and not everybody's, moves to jump into these new tools and technologies. So, we've actually set up, and I know other software companies have set up skunkworks teams, cross-functional skunkworks teams that are like going from concept to code out the door. Like, this is how you can move at pace. So to me, it's a little bit of just challenging ourselves internally by getting people that are really embracing it. And I know some software companies where some of the larger AI users are actually more on the product side, not necessarily on the dev side, because and which is great. I mean, so long answer to your question, it's changed a ton even within the last 6 months, let alone the last 12 months. Things are compressed, and you can have people building. I'm a little skeptical of the SaaS apocalypse stuff, where everybody's going to be building their own things, because I think, things are moving faster and you can build things, but people truly need to understand, if you're not a software company, they truly need to understand software is a treadmill, right? The build is the easy part. It is really about, getting that secured, getting that, evolved, getting that supported. You're on that treadmill of constantly updating and changing and supporting. The tooling's made it a lot easier, but don't underestimate the challenge of that treadmill that's going to go 360 degrees in all different directions, and people need Gatorade and Cliff Bars on that treadmill. So at least I do when I go on the treadmill. No comment.
Yeah, well, at least one of us goes on a treadmill.
Yeah, no,
It's not me.
mine's LaGuardia Airport and going up subway steps. So that's my treadmill. Yeah.
Do you think that your experience with AI is a parallel to what credit unions ought to be doing? I mean, should credit unions be standing up skunk work? Should credit unions be getting AI into the hands of their business team members who understand their members? Seems to me like there should be a lot of crossover between what your observations or what you're using AI to do inside a software company for kind of lessons that a credit union could learn from that as well.
100%. And I remember, I will say, like the Movement board is like kick-ass crew,
Mm-hmm.
and I always learn so much from them. And one of the questions at one of our board meetings, this is earlier this year, but they're like, well, where do you see AI being utilized within Movement? And I'm like, I see every role being able to leverage AI. I mean,
Mm-hmm.
again, you want to use AI intelligently. You don't want to, spend all this time and all this money. I mean, we track like who's using what, and then what's the output, right? I mean,
Mm-hmm.
those are all important things. And that's gets back to the data architecture and have shared skills, shared libraries of, shared artifacts, prompt libraries, all these things to make the organization be efficient and collaborative internally and use the tooling for it is. But to me, inside of a credit union, every role, I look inside of a credit union just as I look in every role within Movement. There are applications for leveraging AI. You just have to do it intelligently, have the training, and have the governance. So I very much think the credit unions could look at how at least software companies are trying to use it across, multiple functions.
Mm.
But personal opinion.
As a as a as an entrepreneur yourself, how has your experience as an entrepreneur changed how you design and create strategy for Movement?
Great question. And one, I'll really credit the many entrepreneurs in front of me. Like I wasn't the founder of, QNexus. I
Mm-hmm.
wasn't, founder of QBT. I was co-founder of Innovation. So really just working with great entrepreneurs and teams at the forefront and also raising capital and really moving forward and trying to be hyper client focused. I mean, to me, and then just being so involved in the industry for years, to me, what it's really with the entrepreneurial mindset and background, it is really where you zero in on what's needed. So there's a tremendous amount of noise. There's never been more noise. I mean,
Mm-hmm.
2021 with the 138 billion that came into fintech, and there are a million
Yeah.
fintechs, and I feel horrible for credit unions trying to keep up with this stuff. Like, who are all these fintechs with
Yeah.
.ai domain names? What the hell do they do? How do they differ? Do they plug into my existing systems? I mean, it is so hard being a credit union, much easier being an entrepreneur. I think from an entrepreneur and from a fintech perspective, it's important to also sort through this noise and zero in on what's important. So when you're at an earlier stage company with more limited resources, you are forced to do so. You are forced to
Mm-hmm.
truly understand the problem, truly be client centric, and truly know how to adapt and pivot. Ideally using data and hiring teams that can do the same, that can wear multiple hats, that don't come up to a door and it's locked and wait for someone to open it. Go find
Mm-hmm.
another door, or pick the lock or jump through the window or whatever. I mean, so to me,
Right.
it's like if you're client centric, you have to come up with solutions. So the entrepreneurial mindset and background really helps me understand where, what is important out of all the noise, where do we need to focus, and then when do we need to kind of pivot or change. And a lot of this is also all about how important collaboration is. Again,
Mm-hmm.
early stage companies can't do everything. We have to partner with a bunch of other fintechs. We have to partner with our clients. So it's different than being with, a $25 billion organization where you've got a little bit more leeway and able to, blinders on
Yeah.
can be okay.
Yeah, as part of True Stage, large organization, right? You evaluated lots of fintechs,
Yeah.
partnerships, investment opportunities, things like that. What separated as you did that review and in your mind, what separated the ones that truly created value for their customers and for credit unions over those that just, had a great pitch deck?
Yeah, no, it's a good question. I'd really defer to like Brian Koss and Mike Krause, Sam Doss, and Elizabeth McCluskey, like the True Stage Ventures team, because they've done such a nice job in getting all those pitches. I get pulled into some of those when they need some geekiness, meaning me being a geek, to help evaluate that. And then also just seeing various acquisition opportunities. Again, I think
Right.
that's the fun part about True Stage is a 90-year organization that has the credit union's really best interests at heart and puts capital and brains and hires people to look at these things of like, how do we help these credit unions? But and then even what we've seen at venture tech. I mean, so to me, to cut through it, it really comes down to trying to understand, what problem are they obviously solving, and then having proof points that they are in fact solving it, not
Right.
from the pitch deck, but, and truly understanding that problem. Like I know some fintechs that are raising a ton of capital right now, more outside of our space even, that are hitting problems that I think are going to be solved more broadly within the next year, just being embedded in products. So that's kind of one of the things to try to figure out is like, what's a product versus a company. So if you're a fintech investor, what is a problem that's being solved that's hard to solve and is not going to be solved by whether it's one of the labs or some a big fintech or rolled into something else. So I think that's an important distinction. And again, others have made this before. This isn't me. So and also understanding the team, understanding the architecture, not just looking at some cool deck or demo. I mean, you and I have seen this a million times where you have companies, fintechs coming in, they have like a super cool demo, and you're like,
killer.
Okay, yeah, but then let me see, how is this architected? How is this going to scale? How is it secured? Is this a proper architecture that can scale a business versus just some cool ass demo that, and even product. So when you see that fintech try to implement and support a bunch of credit unions, like, oops, taking a million years to implement, they're having all sorts of problems. They're having performance issues, in the software itself, so to me, it's, really understanding the right problem focused at the right market. It's a company, not a product, and then having the right architecture and team to really drive this forward, and know that they'll be able to adapt, a group that can adapt and collaborate, going forward. That's half the thing. It can't just be like one founder driving everything. It's got to be a team of people that you believe in.
Do you think AI has made it harder to spot the winners? Because I've seen some absolutely amazing decks, and I was like, okay, show me the product. I was like, ooh, that is not the same thing that you're selling.
Yeah, no, that's so true. And it goes back to like where I feel, I know you and I both kind of feel for the credit unions to an extent, having to sort through it. I mean, to me, that's where I kind of love POCs. And so if someone's, and again, it depends on XYZ investor group, whether it's True Stage Ventures or Circle or Reseda Group or, any of the groups in the marketplace of like what, basically understand what, clients have used the platform or at least POC'd it. And it depends, each of those groups have different stages that they invest in. If it's really early stage, I want to see a client doing it at least in a POC. If it's a little later stage, obviously you want to see, revenue and growth and everything along those lines. And that's like the investment group that acquired Movement from True Stage is called Demopolis Equity Partners. I mean, they're very focused on this space, and they have just like real, strategic minds and fintech, background. So, to me, they're at an advantage because they can kind of, to your point, similar to, I think, us, they can go in and see what's real and what's not real. And like our board, same thing. They've been around the block. So to me, there's a lot of pretty stuff out there in terms of cool demos and, AI driven component decks. But I want to see it working in production. As it's all BS until it's in production, right? One of my favorite quotes.
It's just we're trying to work our way through a lot more of it these days.
Yeah, yeah, exactly. Well, that's the issue. It's just
Yep.
overwhelming. That's again the AI sprawl and all the AI slop. It's like, what the hell?
Inboxes are under siege, right? It's
Truly.
unbelievable how many people want to help you with your business, right? And
Well,
it's
yeah.
the level of effort is so low now that anybody can stand up a website and make themselves look like a professional really quickly.
Yeah, and it's making it quite frankly, it's making it hard. I mean, I remember actually Venture Tech last year. You remember the whole point and counterpoint that Barb was driving, and having the credit unions say what's driving them nuts about fintechs, and fintechs saying what's driving them nuts about the credit unions. But to your point, I mean, we have a real hard time reaching credit unions, and we've been around the block. It's just because they're so overwhelmed; they're almost frozen. Because you've got so many people coming at them, and again, I feel for them, but at the same time, they're in a hyper competitive market. They have to serve the members, they have to grow the business, so they've got to cut through the noise, similar to the what we try to do.
Yeah. Brian, if somebody is interested in finding out more about Movement and about the services you guys offer, how should they contact you? What's the website address?
Yeah, it's Movement Tech. So MOVEMINTTECH.com, movementtech.com. And my email is bbodell, BBODELL at movementtech.com. Yeah, so all work. We obviously we had the people that had movement.com had a pretty big price tag. So sorry about the extended URL, but I was like, that's a big number. We'll pass.
Yeah. It is amazing. Listen, I've known you for a long time. I've looked up to you for years, and I really do appreciate you joining me today. You're an awesome both voice of leadership in our industry, and somebody who also, I think, has so much value to provide entrepreneurs who are interested in selling into our industry. Right. So I really do appreciate you taking the time to come on today.
Likewise, Kris, always great to see you, and I always learn from you, and look forward to seeing you here soon in person.
Awesome, my friend. We'll see you soon.
All right. Cheers.
What a great episode. Brian, I am so grateful that you joined me on the show today. If you like this content, please like and subscribe on your platform of choice. Thank you for being here. We will see you next time.